I think that Bitcoin is a million times better than gold and is going to gradually demonetize gold over time. So no, gold will go to the utility value of gold, whatever that utility value is. But I don't think it's going to be adopted as money in the 21st century. I think the way to think about investing in Bitcoin is you should only invest what you're going to hold for 4 years or longer. And ideally, it's generational wealth transfer. And then you should dollar cost average into it. And for the average person, if they dollar cost average into it as a strong long-term store of value, they'll be fine. And the metric you ought to stare at is probably rolling the simple 4-year moving average. Right, and if you look at the simple moving average over 1,458 days, it very rarely touches that point. It went slightly below it in the depths of the crypto crisis, and now it's trading above it. That number is 22,266. So if you think of that and you say, I know I'm going to hold at least 4 years, then it isn't that anxiety-inducing. And the volatility impacts two types of people. It impacts people that are short-term investors, that they want to make a quick buck or they just never want to lose money. And the volatility also impacts public companies or companies that rely heavily on GAAP accounting, because the volatility is detrimental to the accounting treatment because you have to always write it down. You can never write it up. And so you end up with a circumstance where you could be holding $1 billion and it looks like you have $200 million and no one can tell the difference unless they go to the trouble to figure it out themselves, and that's very opaque. So I would say that people that really are fixated upon GAAP optics, right, they'll be a little bit troubled by it. And then people that have very short-term time horizons are troubled. But for the rest of the world, it's a pretty good idea. It's the best. I've just pointed out to you, we've outperformed every asset, every big tech company, every enterprise software company, 97% of all the companies using this strategy. So if the volatility is the price you pay for the performance. And if you can't stomach the heat, right, you can't be in the kitchen. So I would rather win in a volatile fashion than lose slowly in a non-volatile way. The 30,000, and I think the Celsius thing was the straw that broke the camel's back, where Celsius just completely unwound, and you had a whole set of panicked liquidations as counterparties seized assets and seized collateral and sold it at the market. So that's what takes the market down. And now the market, I think, has probably bottomed, and it looks like it's just looking much better. It's gone from 17,000 up to 24,000 now. But I make the other fundamental point. If you're a short-term trader, this drives volatility, and this is very meaningful. And if you had a weak balance sheet, this is devastating. And if you trusted any of the crypto wildcat banks, right, it's tragic, right? Anybody that put their money in Voyager or Celsius or the like, or gave money to Three Arrows, is awful. But if you look at the fundamentals are you have the head of the SEC endorsing Bitcoin as a commodity. You have the head of the CFTC, ready to endorse Bitcoin as a commodity. You have multiple senators endorsing Bitcoin as commodity. You've already heard Janet Yellen endorse Bitcoin as a commodity. We just saw today the head of the central bank in Brazil endorsing Bitcoin technology. And so the fundamentals are really good. We just had Larry Fink, and BlackRock, in essence, endorsing Bitcoin by saying that they're going to sell their institutional customers Bitcoin on the BlackRock private wealth management system. So what I see is Bitcoin emerging as an institutional investment grade asset being embraced by regulators, legislatures, and large-scale investors. And the entire market's been very educated by this crypto crash. And this has lit a fire under legislators and regulators. I think they're going to accelerate all their regulatory initiatives. And that is educating the market. And ultimately, you have You have hundreds of billions of dollars that wants a long-term store of value because currencies are crashing everywhere in the world. And the thing that holds anybody back from buying Bitcoin is uncertainty about its classification and the way it will be treated by regulators. So as the regulation gets clarified and as people get illustrations of the difference between Bitcoin and Luna, right? It used to be people aren't quite sure about the difference. Well, in fact, a lot of people thought DeFi is better. You get a 20% yield on your DeFi and Bitcoin is dead money. And now they realize that there is a counterparty risk to pursuing this. And this has educated the market, very, very effectively in a painful way, but in a rapid way. And I think it'll catalyze the maturity of the asset class and the institutionalization of Bitcoin to the benefit of the Bitcoin holders and the ecosystem. I think there's still a lot of unregistered securities in the crypto ecosystem. And it's undoubted that Bitcoin is cross-collateralized against some of those unregistered securities. And there's more regulation coming to anyone that's in this space, more clarity. So I think the worst of it is behind us, but I don't think that the industry has been clarified or completely rationalized yet. I think that there's thousands and thousands of cryptos that need to disappear. Right? I think there's a 99% rationalization rate that needs to happen. And so I just think we went through an pretty important deleveraging. And I think that people will be much more careful in the way they view things going forward than they were a couple of years ago. I think we were in a Wild West stage the first decade of the industry, and I think we need to grow. We need adult supervision in the industry, and there's an entire generation of people that need to understand counterparty risk and basic risk management, and they also need to understand the difference between a security and a commodity. And with all due respect, there's still a lot of people that don't really understand the ethical or legal difference between a security and a commodity. And until they grasp the nuance of how you create a digital commodity, they're not going to grasp, the way to segment the market and the right way to think about all these assets. I want to speak out about Bitcoin, right? The chair of the SEC was asked probably 6 times in congressional testimony and other public appearances whether Ethereum was a security or whether it was a commodity, and he wouldn't endorse it as a commodity under testimony and in the public eye. So I think it's above my pay grade to opine, and I know there is a big debate. There's going to be a debate, amongst regulators. There's going to be a debate in D.C. So they will work that out. I happen to be of the opinion it's an investment contract. I think it's quite evident to anyone that spends a few minutes thinking about it. But, I'll leave it at that. It's not nearly as broadly held as it will be. And I think that we're still early days. I think that the institutional interest in Bitcoin has dramatically jumped in the macro community and the hedge fund community over the past year. I think you can see in the body language and the rhetoric of J.P. Morgan and Goldman Sachs, Jamie Dimon, and the way that David Solomon speaks about this, and the way that BlackRock speaks about it, and the way that Ray Dalio speaks about it, and the way that George Soros speaks about it. You can see that we're no longer at the stage where people are skeptical that it will continue to exist or skeptical of its value. I think it's now got the grudging respect of a lot of people. We're really more at the stage where we're waiting for regulatory clarity. There's just a lot of political debates, at the DC level over how much friction will be in the space. I think the banks would like to see more clarity from banking regulators about how much they can hold on their balance sheet and what the reserve ratio would be. And I think the accounting treatment clearly has been a liability for large institutions, because indefinite intangible is always going to understate the value, and it's also going to create it's always going to create confusion. Because I could hold $1 billion and you could hold 100 million, and we would both look like we held 100 million, and you would have to dig deep into my financial statements to know the difference. And so it just makes everything hard and opaque. So I think that we have more adoption to come, and every single thing that happens, every time that there's an advance from the FDIC or FASB or CFTC or SEC or Congress, I think all those things are catalysts for adoption, and we're going to see more institutional adoption as time goes on. I think that Bitcoin is 1,000,000 times better than gold, and is going to gradually demonetize gold over time. So no, gold will go to the utility value of gold, whatever that utility value is. But I don't think it's going to be adopted as money in the 21st century. I think Bitcoin is a better gold than gold. You can move it at the speed of light. You can see with the Lightning Network evolving that pretty soon we'll have 1 billion people able to move any block of Bitcoin anywhere friction free. And so Bitcoin is digital money for the 21st century. Gold was metallic money for the 19th century. So I just think if you believe in sound money, then you should do yourself a service, and you ought to sell your gold and you ought to buy Bitcoin, because Bitcoin is sound money for the 21st century and gold was sound money for the 19th century. Just that simple. The accounting is toxic, and FASB didn't need to address this issue before MicroStrategy, Tesla, and Square all bought Bitcoin, because there was no more than $1 million of Bitcoin in an operating company. So it was an immaterial issue. Now there are billions and billions of dollars of assets in publicly traded companies, so it's material. Again, you got to take a 4-year or longer time horizon. Bitcoin is outperforming everything in 2, 4, 6, 8, and 10 years. It's just that simple. What you want to do is get rich slowly, not get rich quick. And that means that the time-tested technique for investment is you buy high-quality, scarce, desirable property, and you hold it forever. And you just got to figure out what is scarce and desirable and high quality. It looks at what I've said consistently since September of 2020. What I've said is Bitcoin is scarce, desirable property, and I intend to hold it forever. For the rest of my life, I'm not a speculator. And what I've also said is if you're in a collapsing currency environment, you should have negative working capital. You're better off to have debt than to have equity. And what's happened in the past 2 years is currencies have collapsed. You were better to have debt than equity. When I told people that I like mortgages, the mortgage rate was 2.7%. Mortgage rates nearly doubled, and if you had a chance to take a mortgage at 2.8% and you waited till the mortgage rates went to 5.2%, the cost of your home just went up by 80%. So paying off your home with cash is probably not a good idea when mortgage rates are cheap. Holding cash that's losing 20% of its value is not a good idea. The blue dollar rate is 300 pesos to the dollar. I keep pointing this out. So I think what some people just want to find something skeptical or critical to say, but telling people that they ought to buy desirable things and take cheap money to do it and hold it forever is simply the way that you preserve generational wealth, and it's worked that way for a long, long time. It still works that way. You want a simple world, or a simple way to see the world. If you need your money in less than 4 years, you probably want to keep it in the dollar. And if you need your money in more than 4 years, if you want to hold it between 4 and 40 years, you put it in property. And the best property in the world is Bitcoin, and the best currency in the world is the dollar. And there are weaker properties like an Airbnb or building or stock, and they're weaker because they've got counterparty risk, and they've got tax risk and execution risk and competitive risk. And maybe they're not so portable. You can't really move a ranch out of Zimbabwe to San Francisco when you have to flee the country. So what can you move out of Africa to San Francisco when you want to flee the country, right? Bitcoin you can move, and the rest, unclear.